the troubled assets that fall into the short sale classification. Now, I don't want you to get all surprised and go, wow, what are you saying? Is this going to be like 2008, 2009, 2010? No, I don't think we're looking at anything like that. But the numbers of short sales, the number of people who are facing issues with their real estate has increased. We got to go back a little bit, but if you remember after COVID, there were a lot of lenders who made concessions with homeowners in order to keep them in under COVID because they couldn't go to work, they couldn't make their mortgage payments. So in many cases, they deferred the additional balance to the back end of the mortgage, or some of these were just delayed and had to be brought up, and it just didn't go away. Interest continued to accumulate, money was still owed. And what we've seen over the last probably 18 months, I mean, it's been a very minor tick up, but I think as we came into the first quarter of 2025, the bills started to become due. The horrible real estate market, employment market that existed under Bidenomics, under the Biden administration, was piling up. It was running up. We could see how bad the real estate market had come as far as the sales numbers. People couldn't move because of interest rates. There were a lot of things that had put pressure on this market. And the reality is, if you go back, a couple of years ago and listen to this podcast, listen to the weekly real estate update that we used to do, there were a lot of announcements of business closures, business that were just closing. Well, when those businesses closed, like when Big Lots went into bankruptcy, Joanna's went into bankruptcy, and, the list goes on and on. There were a lot of layoffs in the last couple of years due to that. And as good as I think the underlying factors are now in our economy, we are experiencing some troubled asset issues because of the lingering financial situation that existed.